All the academic research points to smaller companies outperforming over the longer term, and I think investors looking for genuine growth need to go down the market cap scale. I was thinking of my grandparents' generation who invest in the stock market for growth, and they would get a dusty old share certificate, put it in the attic, and would remain long-term holders for 10, 20 years in companies, and that's how significant shareholder value is created. If you look at the FTSE 100 today, you're typically getting low single-digit earnings per share growth. If you want that genuine earnings growth, you need to go down and look amongst smaller companies where you can find some really exciting businesses growing their earnings by 20–30% compound a year. So we think there's a place for smaller companies in everybody's portfolio, obviously depending on their appetite for risk, but that's what's generally going to provide growth for investors. We're excited about all the holdings in the portfolio. We have, as I mentioned earlier, quite a collaborative approach amongst the team, and we have a disciplined way of going through the portfolio, ensuring all of the holdings there can create significant value from where they currently are today. I'll point you towards the top 10 for those businesses that we're most excited about. Future PLC has been on a tremendous upgrade cycle over the last 2 years or so. Recent results were very strong, and we think that can continue. Keyword Studios equally has been on a very exciting growth path just over the last few years. Has recently been growing in excess of 60% per annum, and we think that can continue going for the next few years. So there's lots of exciting growth stories in the portfolio. The hardest discipline is the sell discipline, and again we've got a very collaborative approach to ensure that if a company has not met our objectives, the investment case has deteriorated for some reason, often this can be reasons outside the control of the management team, that we'll sell that holding and move on. For those businesses that are meeting or exceeding our expectations, we will take profits along the way and then decide to sell the holding if we feel that we've extracted as much value as we can out of that holding. Now we'll never always get that right. Some recent sales in the last 12 months include Blue Prism and Fever Tree, which well exceeded our expectations and were fantastic contributors to the performance of the fund. And the shares have gone on and been more successful since, which is fantastic. But we felt they had delivered what we anticipated of them and sold and moved on. No is the short answer. Companies and management teams are always facing external pressures and challenges, be them economic or political. So that's normal. Obviously today Brexit is dominating the news channels, but these are international companies. 55% of the revenues that are generated across the portfolio are from overseas, and these management teams are very focused on continuing to grow their companies internationally. So Brexit is something they're having to deal with, and some of the uncertainty that Brexit is creating, but no, it's no more challenging than normal. Markets have not been unduly influenced by the Brexit uncertainty. They tended to have been more influenced by interest rate cycles or an interest rate uncertainty in the US rather than the Brexit debate in the UK. They have done so for year to date, and yes, I mean, if stock markets remain stable over the remainder of this year, we think that will continue. We've been really encouraged by the recent results season. We've had some fantastic figures reported by our investee companies. We've seen a lot that have upgraded their earnings expectations for the current year, which is very, very encouraging. Over the longer term, certainly we believe in the outperformance of small versus large companies. More difficult to predict over short-term time horizons, so we tend to avoid doing that.